I'm now going to invite Dr. Paul Schur up here to lead us in the question period. We have about 15 minutes to have the questions that you have submitted answered. Dr. Schur is an assistant professor of economics at the university. He works on financial intermediation, industrial organization, corporate finance, and European economics. His research has appeared in a variety of economics and finance journals. Dr. Schur, will you join us?
Right here. Right. All right, so my task tonight was to ask questions to the panel. And these questions were sort of thrown in by yourselves. I had the difficult task to summarize 75 of your questions in a bunch of questions that is digestible by a panel. And in the interest of time, we cannot deal with that many questions. So I have to summarize, unfortunately, 75 of your very interesting questions to about 8 to 10. That having said, by far the most interesting question I thought was, what is economics?
No.
So I did want to do justice to that one question, although I will not pass that on to the panel because we can discuss this forever. And in fact, I and probably a few people on the panel have written PhDs about that very question. So what I did beforehand is classified these questions in 10 classes. I thought that will make it easier to sort of, digest all the questions, process them, and sort of present a coherent story to the audience. And what turned out to be very interesting is that by far most of the questions, and in fact 1/3 of all the questions, have to do with the ability of this panel to predict the future in terms of the stock markets.
It's very easy to answer.
So, for instance, a few of these questions, about 15 of these questions, can be summarized in 4 words. And these 4 words are buy now or wait. And more generally, people are interested in how will a world recession affect the market. So these are 2 questions which I'm throwing out at the panel right now. I'm also going to ask the panel to not start answering questions of me. What I propose to do is ask all the questions in one go, bunch them all together, and then basically ask the panelists in order of their first appearance to comment on these questions and also comment on other interesting stuff that they have heard from the other panelists. That is probably working the best, given that we're sort of going a little bit in overtime, right, Lucinda? Correct. Excellent. So let's get started then. The first question is related to policy in times of crisis. And the question is, well, we just have a rescue package of 700 billion, and the earmarking of this rescue package has changed a bit, as we have learned tonight. The US car manufacturers would like to change it a little bit further, and they are interested in sort of also drawing on these funds. The question is it a good idea to rescue the US automobile industry by using the 700 billion which was earmarked for the financial industry? The second question brings us a little bit closer to Western Canada and to the province in particular, and also to Victoria in particular. So there were a few questions on what are the policy options of local governments. And there was actually one question which I thought was very interesting, made reference to the G20 meeting that took place last weekend, and called for a V20 meeting, a Victoria 20 meeting, and basically proposed, well, we have very smart people in Victoria. We have at least 20 smart people in Victoria, 5 of which are represented right here on stage, and the other 15 are probably among the audience. Why don't we just get together and dream up beautiful ideas so as to avoid severe unemployment from striking Victoria? And although I present it maybe in a ludicrous way, it is a very serious question. What can local governments do in order to soften the impact of the crisis? That is the question. Then going to the section on unemployment, jobs and growth. The question, and this is a very straightforward question, and yet I like it very much, and it is the following. Will we see a recession, or will we expect a depression? And if so, how long are we going to suffer? So that's the next question on growth. Then let's move on to credit markets. We've seen that credit markets are hurt and spreads on risk are increasing. The question here that was asked is, which sectors are going to be hurt most in terms of lack of credit? And in particular, for instance, is an Ontario supplier to a Detroit car maker, is this Ontario supplier still going to have protection from credit default swaps, for instance, from credit protection? And let's go to my final two questions, I guess, which have to do with housing and residential property. The question is, why are mortgage rates so high and going up, whereas the Bank of Canada rate and also the prime rate are going down? How can we reconcile that? And finally, the building sector is a big employer in Victoria, and we've heard from a panelist today that residential building has come more or less to a halt. Projects are being finished now, but very few new projects are started. So what does that mean in terms of employment in the building sector? These are my questions, and I propose that the panelists get a chance to answer them.
You left out an important one, which is our social agenda, and our people that are already been struggling enough with not enough help, and I think that's an important question.
I'll invite the panelists to comment on that very question as well. Thank you very much. So, how many minutes do we devote to the panelists for these questions?
Well, we have about 10 minutes left, so I'm going to suggest that perhaps each panelist would address one of the questions that they're particularly interested in, and that would give us a bit of a taste of everybody.
That sounds good. So each panelist has 2 minutes to address one particular question of the questions asked. Basma, how about you start?
I can comment on the question about recession versus depression, and the views on this are really very different, ranging from optimistic, as you have seen tonight, and very pessimistic. So the pessimistic view is really a very long recession, perhaps not a depression, but it could be a long recession, at least in the case of the US. And the people who are supporting this view mainly bring up the example of Japan and its lost decade, as I mentioned earlier. Now, the experience of Japan, some actually find it a lucky experience, because Japan has been helped during its recovery by has been helped by external demand that was growing in the world. In this particular situation, especially for the US economic outlook, it's actually many countries simultaneously entering into recession. So it doesn't really help in that sense, which may lead some to actually predict a long recession. And for Canada, although we have seen that Canada is relatively in a better situation than the rest of the countries, particularly in Europe and the US, let us not forget that Canada depends a lot on commodities, and the future prospects for the world are a little bit in decline, and commodity prices are expected to decline also. So this will certainly hurt the Canadian economy, in addition to the fact that Canada also depends heavily on exports to the US. So if the US goes into recession, chances are that we will feel this very well in Canada also.
Thank you very much, Basma. Graham.
All right. Well, I'm going to take the social agenda question. I'm going to reframe it as best as I can, or frame it as best as I can. I presented a fairly pessimistic perspective on what could happen in British Columbia and what could happen in Canada. One of the sad facts of recessions is that it hits the low-income people particularly hard, low-income families and so forth. it's important as as we move into periods of slow growth and situations like this, that government policy, British Columbia, and this is something that local or BC policy can in fact focus on, does in fact pay heed to or make sure that services and benefits are stable and increasing if need be. This is actually quite important, and this, in terms of putting money back into the economy, this is not only perhaps socially desirable to do so, but can in fact be a particularly good way to get money into the economy. Tax cuts, for example, while can be quite beneficial on a sort of broader perspective, in the current environment, one of the large concerns about tax cuts is they may in fact not be spent to the same degree that we might hope, and that's really what we're trying to do, is get spending going. So assistance to low-income families and so forth, which may be adversely affected, or much more so adversely affected by the events that are unfolding, is an important part of BC government policy and Canadian government policy as well. If I can just say one other thing about the recession versus the depression, I'd like to emphasize a point that Robert made. It's important that we don't panic. We've been through recessions before. I did try to emphasize that it was reasonably large, that we were in for a serious one. But the difference between the 1930s and now are quite substantial. And most importantly, as Tony alluded to, and I alluded to in my talk, the response of central bankers has been completely the opposite, where in the 30s they essentially tightened up credit and tried to maintain sound money. In the current environment, we've had very proactive central banks providing liquidity, and that will and has made a huge difference. Thanks.
Thank you very much, Graham. Tom.
We're all going to comment on the recession, I guess.
No.
I mean, and to Graham's point, I think before we came on, we suggested the best way to avoid panic is to shut down the media for a month.
I'm afraid your 2 minutes are up.
The Canadian economy, obviously, it's going to slow, and it'll probably be in a technical recession for the first half of the year at least, because 60% of our economy is consumer spending. And so we all realize, and everyone in this room is probably taking a deep breath before they spend a lot of extra money, particularly on large disposable discretionary items like cars or fridges or whatever. So we know spending is going to slow down. 40% of our economy is export-oriented, and when the U.S. has a one-year supply of new homes, our exports are obviously going to be affected because it takes a while to work off all the excess inventory just in the housing market in the States. So we are going to have a slowdown. Unemployment is going to rise somewhat, but I mean, our unemployment is unbelievably low. Most of us who were in the 70s remember 11% unemployment. Well, I don't think anyone is even projecting coming to that number. So I don't think the worst case scenario is that it's going to be a recession, technically anyway, for at least the first half of the year. Tony made the comment that the first sign of recovery is usually in the financial markets. Usually we have an economic crisis followed by a financial crisis because the banks start writing off loans in a bad economy. This time, one of the few times, just like 29, we have a financial crisis first. That's not to say it caused the economic crisis. The economic crisis was partially coming already. We were already seeing a slowdown in 2006. But the financial crisis certainly has caught the headlines. So I think some reports are that the financial crisis seems to be moderating. Some of the efforts, as Graham mentioned, by the central governments and the central banks seem to be taking hold, and we might be coming to the bottom of the financial crisis. Historically, the economy recovers 4 to 6 months after that. So that's why a lot of projections, including the World Bank's, is that late spring, early summer, we'll see the economy gaining traction again. The interest rate, I got a comment on interest rates, and I really, because I was being rushed at the end, the credit markets.
I think your time is up, but you can finish your sentence.
You want me to finish? But I want to explain prime. People think of prime as the benchmark rate, but it's been decoupled from reality. If you look at the yield curve these days, the short-term yield curve out to a year is very steep, and then it moderates going out beyond a year. So the funding model of the banks is decoupled from prime. So when they drop prime, that's an indication, but that doesn't bear any resemblance to reality. Our funding costs are higher than that. So credit's still available, but it's going to cost more. So if you have a prime-based loan right now, buckle up, because the banks are going to ask you to go up a bit, because the funding model for the whole FIs has gone up. Money costs a lot more, particularly in the short term.
Thanks, Tom. I mean, you took a bit of time, but you answered 3 questions. It was very well done, including the one on the mortgage rate and the link with the prime rate.